While the events of the last 2 months do cast somewhat of a shadow over these accounts, what they do indicate is the strength and resilience of the New Zealand economy, and that does bode well for the future, including our rebound from the latest restrictions. To begin, I'll give you an overview of the audited financial statements for the year to 30 June 2021. Today's accounts show New Zealand's economy has continued to perform strongly and better than expected during the economic shock caused by the COVID-19 pandemic. This year's results show a lower deficit, higher tax take and lower net debt than forecast by the Treasury in Budget 2021 and indeed by most external commentators as well. Most key indicators are stronger than forecast, the key indicators being the Obergau deficit at $4.6 billion is $10.6 billion better than forecast at Budget 2021. Net core Crown debt was 30.1% of GDP at the 30th of June, below the 34% forecast at Budget 2021. And the Crown's net worth increased from budget by $40 billion, largely owing to strength in Obergau and asset valuations, which are largely non-cash, and the strong investment returns for the super fund and for ACC. Core Crown revenue was $98 billion, up $12.9 billion or 15.1% from the year before, and $6.4 billion better than forecast at the budget in May. This was the result of the economic rebound since the initial outbreak of COVID-19 and of course was ahead of what was forecast. Most major tax types have increased over the year, reflecting that rebound. GST was 17.5% up, reflecting consumer confidence. Corporate tax was 29.3% up, reflecting strong returns in the business sector, and source deductions, essentially PAYE, was up 9.2%, reflecting both low rates of unemployment and solid wage growth. The operating balance before gains and losses, or Obergau, shows a deficit of $4.6 billion in 2020-21, or 1.3% of GDP. While a deficit was expected, the result was, as I said, $10.6 billion better than had been forecast in Budget 2021. Obviously, this takes into account the revenue increases that we've seen, but also core Crown expenditure was $3 billion lower than forecast as a result of some delays in spending by departments, limited need for the COVID economic supports during this period, and it is in line with the expenditure of previous years.